I mean, that was the SIP.
Every month
right?
SIP inflow is...
Yeah. I am very confident this amount will double within next 2 years. It should be something like 50,000 crores every month, meaning something like 6 lakh crores of SIP alone, maybe much more than that, I don't know. So we are in that, the confidence, as I rightly earlier put, this is like never before. The entrepreneurs, the investors, the businessmen, the communities have never had such kind of a confidence in their life, in the society on India. So this is a very different kind of thing. I have been in the market for the last 34 years. I think you have the same amount of time in the market. I started as a floor trader in Mumbai in 1990. So I have seen that trading ring outcry system to the most modern electronic T+1 trading system in India. This is like nowhere in the world there is a better system or even equally good system. So we have all those kind of things. I have traded in the market when India was purely a socialistic country, I would say, to today's mostly free market economy. I have traded when India had to pledge our gold. And today we are talking about something like nearly $700 billion of forex reserves. So India has been changing very fast than what all of us think about. And the next 20 years, 25 years, I think it's going to be amazing. We have different threads joining together. Today in the morning session, everyone was talking about all our advantages, the demography, the geopolitical advantages. We are becoming very powerful. Any geopolitical formation in the world, India will be a very important part of it. And our non-aligned policy is really helping. Whichever government has been there, India has been more or less, towards that. And we are becoming very powerful. No country in the world, no large investor in the world can ignore India. We are coming to that kind of a position. So I feel the past has been very good for equity investors in India. I remember, now Equity Intelligence, my firm's name is Equity Intelligence. We do portfolio management. I live in Cochin. It's a small firm. It's a small fund. Only if you are in Mumbai, you get a feel of it or you can really learn it well. Today, there are no geographical barriers. You can be anywhere in the world, relaxing. If you have a connectivity, you are well connected and everything is on your fingertips. So the world has changed a lot. Of course, I left Mumbai in 1999. I was initially working with Kotak Securities. Then I moved to Parag Parikh Financial Services. Parag Parikh, PPFAs, is a very premium, much respected mutual fund today. So, but I didn't like to live in the cities. So I moved back to my hometown, Cochin. There also I live in my farm, 1 hour away from the city. That's 3 days a week. So life has been beautiful. The journey has been great, thank God. And I'm not a very big investor or very large fund manager like most people around here. So it has been good. I would thank, perhaps I was lucky to be in this domain. And I had spent all my resources to learn, my time to learn about it. I was not in a hurry to trade and make money. So that really helped me. So I think a lot of youngsters today moving to options trading, F&O kind of verticals, which is not a healthy trend. Ultimately, all those people may start investing in like value investing. That really makes sense. That is what creates wealth. The other thing is, I think, very near to gambling. Some people, professional traders, or those informed people, which is not really good. Informed people and professional traders may make money, that also if they are lucky. But even someone with 10,000 rupees out there can start investing in equities. We have democratized investing. So that is something very special about India. The way our digitalization has been democratized. Any individual, any citizen of India can do it. The financialization of the economy, or what do you say? So we are very special about it. The way Indians has adapted to accepting the new technologies, our UPI or the Aadhaar or the COVID app is something nowhere in the world. We don't really realize the value of it. There are a section of people within India criticizing it, thinking of its failure, but we have succeeded everything, all those criticism, and India is the best in absorbing the digitalization and democratizing that. These things are also very important if our economy has to grow to $30 or $40 trillion. Without these things, we cannot do it.
Mr. Bagga, what is your investment philosophy? How do you invest in the market?
No, I have been a manager of investors. I was a CEO. I was very fortunate to be born when I was born, and I wrote the India story. But even now, I would trade in being young again and trying this present India. But I would talk more of the India opportunity, what India is throwing up right now. And we as Indians must not miss that boat. That is the biggest message, if you can take it from this economic summit. You have seen a lot of ministers come in, a lot of finance wizards have talked. Main thing is people spread a lot of negativity. We tend to blow up a few negatives. But if you see the mega trends, those are in favor of India, and India itself is a mega trend. And this is a reversion to the mean. In the 1990s, Angus Maddison, a professor in Europe, had done this study, and that was a standard presentation we used to do. In the mid-2000s, I used to run the fund for Temasek in India. And that really showed how from zero CE to 1700, India was the biggest economy in the world. Columbus discovered America while looking for India. Like while looking for a trade route into India, America was discovered. America was an emerging market or a frontier market till about 1900. 2 world wars happened which destroyed Europe, and America didn't have wars except for Pearl Harbor on its own mainland. And that made America the reserve currency, and the world changed. India was 27% of global GDP for 1700 years. By the time we were independent, we had come down to 2%. Now out of 106 crores GDP per annum, we are about $4 trillion out of 106. We are slowly bringing, China has already made huge things, huge progress. We are China of 2007. Where we are in GDP, China was in 2007. See where they have come. It is very possible in the next 2 decades. And as Porinju was mentioning, this 4 to 30 will not have same thing coming up. We won't be gems, jewelry, leather exporters. It will be many new things coming in. Think of that. What are the new things coming which will add $26 trillion to the Indian economy? Some of it will be 4 into 2, but there will be 25 trillion which will be totally new economy, new companies, new ways of making money. That is what we have to focus and leave the negatives out. If you have to make money in any market, you have to be optimistic. Without optimism, you will miss the boat.
Do you fear a crash, sir? I mean, there is always that stream of fear-mongers who say that this is a bubble, the mutual funds are a bubble, and this is all going to crash. Is it really going to happen? What's your take on...
There's no question of bubble at all. Nowadays, no sensible people are talking that way. Those who understand India and, how we are doing today, currently, how what is done today and in the history, that also will be important for the future. So everything is in place. We have created a fantastic platform, especially in the last decade, for the future growth. So, and then that scale of thinking. When we talk about, now railways or port or roads, the scale has moved significantly in the last 10 years. Today in the morning, I was just reading, Sridhar Vembu had tweeted. It was very catching. He was talking about, can India create $100 billion technology companies? And also he's adding, not by market capitalization, by revenue, by the business. He's talking about the business number. So India started thinking of $100 billion revenue companies. So this is not a small thing. This is a new India, where we were scared of dreaming at that level of that scale. So this is something really amazing. That's why I told India is at the beginning of something really, really big. And we have all the symptoms, all the ingredients in place, all the threads are joining together. So there is no stopping.
And if we have to put a number to this, the India story, if we purely look at it from, let's say, a Nifty or Sensex, where do you both, both of you see Nifty probably at 2030 or 2047, the Amritkal vision that the Prime Minister has been talking about?
Oh, I think
you want to give a number?
Nobody's thinking in those terms, the number for the Nifty.
2030, can we say that Nifty could reach 50,000?
To be very frank, I'm not very sure about the latest Nifty.
Okay.
I don't
double
watch
from
Nifty
where it
and
is right
Sensex,
now.
to be frank.
Okay.
I'm a pure value investor,
Okay.
long-term value investor.
Okay.
So it's important, which companies. You have to see the businesses individually. Of course, we need to have the macro outlook and everything. We are so lucky to have a stable politics and a strong leader. And our stable politics is going to continue. So there is nothing to worry in those kind of aspects. So there is no reason to be, skeptical like that.
Not skeptical, in fact, bullish, I'm saying. Mr. Bagga, what would you say? Would you like to give a number?
Very simple formula. Your nominal economy grows at 10-11%. Rule of 72, you can see every 7 years you will double your economy. And the market moves in line with the GDP, 1:1 roughly. Sometimes it's 80%, sometimes it's 120% of the GDP. So roughly, if you are $30 trillion in 2047, which is a good probability, it's not just an Excel sheet, your market will be $30 trillion. Right now, you're $5 trillion. So your Nifty can be 6 times quite easily, and your Sensex can be 6 times. So say 5 lakh Sensex, 1.5 lakh Nifty, not out of the realm of possibility.
That's
very easily. But we will create something so it doesn't become so big. It will be very difficult to trade if there are so many zeros. So we'll just...
Maybe we can have a split on the Sensex.
And
5 lakh Sensex will be difficult. Yeah.
And gentlemen, 5 sectors you would individually bet on over the next 5 years. That would be my last question before I...
Yeah, I think banks to start with, who will fund India. The banks will be the leading sector. Anything to do with consumption in India, be it staples, be it durables, be it auto, all, right now you're seeing a downturn. It will come back, but on a longer term basis, these two. So consumption India, banking India. The third will be IT. We have a very strong competitive advantage as a country. Your service exports will go up. They're already about 350 billion. It will go into the trillions. We will be the hub of all GCCs. Fourth, anything to do with digital, AI, robotics, space. Some of you youngsters will get to go to Mars. A couple of years back, I met in a conference, I met 2 ladies. And I said, okay, I'll see you again. It was a hedge fund conference, and they said, maybe not Mr. Bagga. I said, why? They said, we are the 50 chosen to go to Mars on SpaceX whenever the rocket goes. So once we go, we are not coming back. We'll settle the colony there. So actually people are there who will go to Mars. It's going to happen. We'll all travel in drones. We'll fly our own drones. I will not be worrying if I'll catch my flight today. I'll just take my drone down to Bangalore. And so it's happening. And you youngsters will see, some of you will go to Mars. So space, transportation, digital, AI, robotics, anything you see, at least put some little money in it. Something will click. We were very lucky. We were given stock options in a IT company by the foreign bank I worked for. And so many of my colleagues, 2,000 rupees became 8 crores, 10 crores, 15 crores, all got retired for life on just that one ESOP. So it's possible. Go with those technologies, this digitalization, financialization, formalization of the economy, all these trends are going to work. So banks, consumers, anything to do with IT, and go to Mars.
Wonderful. Mr. Veliyath, your 5 quick sectors.
Yeah, I think considering the structure of Indian economy and where we are heading to, one need not worry much about the sectors as such, Every sector also has its own problems. And, some companies within the sectors are more futuristic in the nature of business. When you take pharmaceutical, some of them may be stagnant and some of them may not exist after some time. Some of them may go multi-baggers from here. So that is applicable to many sectors in technology. Some of them may die. Some of them may be very small today, much unheard about today, can be billions of dollars market cap in the future. So I feel it's more of, you look at the companies, the business model, whether it is how futuristic they are, how relevant they are going to be after 5 years and 10 years, and whether something could be disrupting them. So we have to be watchful about those things, more than looking at the sectors. I think as you rightly put, some companies in technology, which may be very small today or medium-sized, the digitization world they are going to do very well. Some of them may be 10x and 20x in the coming years. So you have to create a few small portfolio of such companies, new-gen technology companies, but be very watchful. Some of those good companies, the valuations are very, very difficult for us to start investing at this point of time. Maybe there can be deep corrections. The market do not go linear. We have to be always watchful. There will be corrections. It's part of the journey. Look at the future trajectory of these businesses and stay invested and be watchful. Thank you.
Wonderful, wonderful. Mr. Bagga, Mr. Veliyath, thank you very much. Mr. Bagga, we don't want you to miss your flight, so please.
Thank you very much, Mr. Ajay Bagga and Mr. Porinju Veliyath. It's a pleasure having you with us.